gold has just done something incredible. For the first time ever, it has crossed the $4,000 mark per ounce. That's right, the world's oldest store of value is shining brighter than ever. But this rally isn't just about gold. Silver, platinum, and even industrial metals are catching the same wave. And the impact? It's spreading across every corner of global finance, from stocks and bonds to currencies and crypto. So what's driving this glittering gold rally? Why are precious metals booming in 2025? And what does it mean for all other asset classes? Let's break it down in simple, clear terms. Gold's surge this year has been nothing short of historic. According to Reuters, gold shot above $4,000 per ounce in October 2025, its highest level ever. That's a jump of over 50% since January, making it one of the best performing major assets of the year. Silver is also stealing the spotlight. It recently hit around $49.5 per ounce, an all-time record. Other precious metals like platinum and palladium have followed closely, supported by strong investor demand and weakening confidence in the global economy. A few key things are happening all at once. First, there's a rush towards safety. With wars, trade tensions, and unpredictable government policies, investors are running to assets that feel solid, and nothing feels safer than gold. Second, the US dollar is weakening. When the dollar drops, commodities priced in dollars like gold and silver become cheaper for international buyers. That drives up global demand. Third, markets are expecting the US Federal Reserve to start cutting interest rates soon. Lower rates make gold more attractive because it doesn't pay interest, so when bonds yield less, gold suddenly looks better. And finally, central banks around the world are buying record amounts of gold to diversify their reserves. That extra demand adds even more pressure to prices. Whenever gold surges, silver tends to follow, but often with even more dramatic moves. That's because silver has a dual identity. It's both a precious metal and an industrial one. While gold mostly sits in walls or jewelry boxes, silver is used in things like solar panels, electronics, batteries, and even electric cars. In 2025, as the clean energy transition speeds up, silver's industrial demand has skyrocketed. At the same time, limited supply and mining disruptions have made it harder to get. According to HSBC's recent forecast, the average silver price in 2025 could hit $38.5 per ounce and may rise further in 2026 and 2027 if supply remains tight. Even India, one of the biggest silver consumers in the world, is struggling with supply shortages. Some Indian investment funds have even paused new silver ETF purchases because domestic prices are so high. This combination of strong industrial demand and global uncertainty is pushing silver to levels unseen in history. Investors who can't afford gold are turning to silver, adding more fuel to the fire. The gold rally isn't just a metal story. It's sending shockwaves across all markets. Let's start with stocks. Normally, gold and equities move in opposite directions. When the stock market falls, gold goes up. But this time, both are rising together. That's unusual. Analysts at CNBC and Reuters point out that investors are buying both growth assets like tech stocks and defensive ones like gold at the same time. This suggests that people are hedging their bets, staying in risky markets, but also protecting themselves if things go wrong. For bonds, gold's rally poses a challenge. Bonds usually compete with gold because they offer interest. But if central banks start cutting rates, bonds yield less, making gold a more appealing store of value. In that case, investors may reduce bond holdings and move money into metals, potentially pushing bond yields higher. Then there's the US dollar. Gold's historic surge is partly a reflection of fading confidence in the greenback. The dollar has weakened against major currencies as traders anticipate easier monetary policy. Since gold is priced in dollars, a softer dollar makes it cheaper for global buyers, pushing its price up further. In other words, the gold rally and dollar slide are feeding each other. One goes up and the other goes down. So, what does this all mean for regular investors in 2025? It means people are rebalancing portfolios. For years, gold was treated as a small hedge, maybe 5% of a portfolio. Now, big institutions and funds are reconsidering those ratios. Some analysts suggest increasing gold exposure to 10 to 15% depending on risk tolerance. At the same time, many are adding silver and industrial metals for growth potential. Silver offers more volatility, meaning it can rise faster in good times, but also fall harder in bad ones. Investors comfortable with short-term swings are finding opportunities there, but experts also warn against getting swept away by the hype. The gold rally is powerful, but rallies can overheat. A sudden rebound in the dollar or a sharp rise in interest rates could trigger a correction. So it's important to stay cautious, use stop-loss strategies, and avoid leverage. This is all from my side for today. I hope you found this video helpful, and if you do, make sure to give it a big thumbs up and subscribe to my channel for more financial insights. Thanks for watching.